Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, June the 23rd, 2026. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. High-level overview, wave 1 is done, working on wave 2 down. Is this the end? Possibly, that we're ready to go breaking out. Or do we make like another lower high, lower low, and continue this stair step down? Or do we even continue to push toward our original target, which was between 87 and 80? What we were looking for is way back in 2008 when we bottomed and reversed. We went up to our target of 114.72. The target was 115 to 120. Reach 114.72, not too bad. Now we're looking for that correction, but do we get that 618.786 type of retracement, or are we going to stop somewhere in this 38 to 50% range? I'm not 100% convinced that this is definitely over now. I am definitely 1,000% confident on a 100% scale that once this wave 2 is over, we are going to go breaking out to new highs, and we're going to be targeting at 130 to 140. So let's drill down and see what's happening as we look like we're trying to. This is a current daily candle, or this monthly candle anyway, currently is a little bit higher than the previous one, where we went up here, pulled back, went up here, pulled back, went up here. But you can see we came down, spiked up a little bit higher, and we were unable to hold that. We end up closing back down. So if you're long the dollar index, we're reaching those extensions we talked about last week. That based on price action, looks like we're going to make a run toward that 1.1448 slash 1.272 extension off of the prior move. And that's exactly where we are. So jumping into the charting platform, we can see we're right dab in the middle, right there. We reached the 1.448, kind of pushing towards that 1.272. So I'd be taking profits if you took this bounce. Doesn't mean it can't go higher. It means we're getting in overbought territory. What does that mean? Well, you come over here to the software and you can see the daily is back in overbought territory. And as we're peeking out here, the daily's getting back toward overbought, and our weekly is getting back toward overbought. So that tells us at some point, this little run up is going to have a pullback. Is it going to be a substantial one in the nature of, do we get a weekly cycle down? And Eric, maybe we break back down and even go to a new lower low. That's possible. Or do we turn over like last time and actually slingshot higher yet again and continue this scenario? Remember the short squeeze, maybe a little bit of this rally is part of the last year was the big short. Anything but the dollar, my friends, short, 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 short. So all the big money was shorting the dollar for this to go lower. 38 trillion in debt, blah, 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 and all these things like short the dollar. So is this going to squeeze? I still think it's right around that 102 level. Maybe some of this is slight short squeeze, but I think the big pop will come and push us toward that 105, maybe higher, if we can close above 102. That'll really put that short squeeze against all the big money that's been short since last year on that down move. So far, so good. So that's why I'm saying be careful here, because yes, the daily is pushing higher, the weekly still overbought, both of them. But what typically happens when you get to a resistance zone and you're in overbought territory on multiple time frame, you're going to get some sort of pullback. So again, do we get a weekly slingshot higher, or do we get a weekly cycle down? Well, it's going to be one of the two. So back here, the reason I'm saying taking profits, this is probably going to push like a magnet toward that 101.46. We're only 1/10 of a point from there, which, I mean, this thing could pop up there real quick. So this is kind of what we said last week. You'll notice on the schedule, I said dollar index likely headed to that 1.1448/1272 extension. And that's pretty much where we are. So again, I would be in a position of authority on that, because what can happen is that we get that daily start turning over, the weekly start turning over, and all of a sudden we reach the extension, we get a pullback. If it's a trend continuation, typically you come back to where you broke out from. You reach the extension. Well, it's like one of three things. A, when you get to the extensions, you just continue higher and you would go up here towards that 102 target. This is going to be interesting if we could close above 102, because then I think that short squeeze will come in. We've been talking about this for many months now. Hey, we close above 102, you probably might consider going long, because in my humble opinion, I think we're going to run up here and test that 104 to 107 level, which is off of a prior move. And where does that 104, 107 level come into play? Right here. From that prior short to dollar of last year, that high down to this current low, that 104 and change, that's our 618 retracement zone. So if we hit the short squeeze, it's likely going to suck and pull price like a magnet up toward that 104, 105-ish, maybe even push toward 107. This is the critical, absolute critical zone to tell us if this thing is over and we're truly ready to go breaking out and make that run toward 130, 140, we got to get above this. But the reason I'm showing caution is even if we weren't able to do this, we close above 102, we short squeeze up in here. Well, guess what that daily and weekly going to look like? Extremely exhausted and overbought. So I would expect some sort of, even with the short squeeze pushing it up into here, I would expect to pull back off of that. The question is it a 618 rejection and we actually go lower low? Or is it simply a retracement to then trend continuation? So until we can really call this with a high degree of confidence that this is over, we need to get above this big pink box, and we still got a long way to go to get there. And when we're hitting extensions right now, and my daily's overbought, my weekly's overbought, I'm not real gung-ho on going long. But if you took this bounce where we kind of said last week, based on this price action, looks like we're going to go up here and visit. We're there. So do something about it. If you're long, take your profits. Yes, this possibly could get to 102, hit the short squeeze and go higher, but this also could start turning back down as well. Fair enough? So in closing, is the dollar ready to go breaking out? Maybe. Until we clear this hurdle, we still cannot say with a high degree of certainty that this is definitely the bottom and we're ready to go and break out. If you look at this latest price action from the low, this looks like a three-wave move, and right where this target zone is would be like an equality move. A, B, C. And if that ends up being a three-wave correction, What was the prior direction? Downtrend. So this could be corrective, and yet we still go lower low. So that's why I'm telling you, we hit 102 and close above. Yes, I think wholeheartedly this thing is going to grind and grunt and a laboring pop up here. Just start squeezing those shorts into that 104, 107 level. But just because we get up here does not give it clear sailing. We're going to slice through here and go ripping to 130, 140. I think if we get above this, we will stair step our way toward that 130, 140 target, and it'll probably take more than days, more than weeks, and more than months. I think it'll take probably a few years grinding up there. Amen? But do we fail here once we reach this target zone, which we're getting in the lower end of it? Or can we continue this to hit above that 102, get the short squeeze, and pump us up toward that 618 retracement? We clear all that mess, then yes, you'll hear me change my tune. And this looks like it's done. Stick a fork in this, but we got to get above here. Why am I even bringing that up, that this is critical? Well, go back even further in time when we had the COVID low over here. We had this low. This was part of that long term. Remember, it's way down here back in the 70 range. That was back in 2008. That's the low off of our MetaTrader chart. So when I show you this at the start of every class, we look at this. This is this low way over here, way back in 2008. And we were talking about this move that the dollar was expected to make a run toward 115, maybe 120. Well, it stopped at 114.72. That was our destination for years in advance. That was our destination. About 4 years ago, we talked about, well, it's time for a correction, and we're going to get some sort of bigger correction. And my destination was a deeper retracement. Typically, you get a deeper retracement on these. And we said, okay, probably. But we did say at some point, wave two, here, or somewhere in between, use the big cursor. Here's the low right now. Here's where we kind of said we more than likely should get a deeper retracement. But hey, it doesn't always happen that way. But somewhere between that deep retracement and this current retracement, this is going to end. And what happens when it ends? We go breaking this new high, onward and upwards toward 130, 140. So I was looking for from this swing point low up to this swing point high, I was looking for a 618/786 retracement. There's my 618 right around 87, 88 zone, or a deeper one pushing the limits toward a 786, which is my 80 zone. So we're thinking something between that 618, 786 zone here. Well, guess what? If you look at this COVID low over here, up to the high, we're in a 618, 786 zone, right? So is it going to end up being this one that ends? Or are we going to get the deeper one off this swing point low and hit the 618, 786 zone to reverse? But it's going to be between one of these two. Either this one we go breaking out, or we go further and we go breaking out. But that was kind of the plan. So far, so good. So back to this charting platform. From that low up to that high, we broke the 618 to the downside. And there's a rule we follow. You get the swing points, you get your lows and highs, and you break back below a 618 retracement, you have a 75% chance you're going to go visit the 1448 extension. Kind of like we just did on this much smaller scale, where we broke the 618 to the upside, and we were likely headed to the 1448, 1272, which the dollar's bouncing to as we speak. Same principle. But this one obviously was years ago from the COVID low up to the high. We broke the 618. We have a 75% chance we're still likely coming down here. When is this off the table? Knowing this wave two is going to end, Eric here, James, is it later? We go way up here. That's the plan. We're definitely going up the 130, 140. But do we need to go lower first to get there, or is this it? Kind of ironic it's going to be, if it's off of this low, that high, 618786 retracement reversal, or do we get it off of the low way over here and we actually go lower low to these extensions? At this point in time, because of the prior price action, breaking below that 618, we still have a 75% chance we're going down toward 85. And a 70+% chance we go towards 82. And that puts us right dab in where we had originally talked about, between that 618, 786 zone. So I can press that, well, it won't let me do it. But you can see that 786 is 80 and that 618 is 87 area. So do we get it? We clear this pink box, this is off the table. Because, well, wait a minute. Even when we set off of this low to that high, we break the 618, that's the 87 zone, where we kind of talked about potentially pushing toward a 786. This was never going to make us go lower low, right? We were never looking for something like that. But when do you have the rule, follow the rule, and when do you look for a retracement to fail and go breaking out? Well, that's where I come in. Because yes, we still have a 75% chance we're going lower low here. And even if we get to that, would that mean we got a 75% chance we're going lower low here? No. We're looking for a retracement and a continuation. So this is just part of a correction 4 years ago that we're expecting, and then we're expecting a breakout. So this is definitely the destination, no matter what we do. If this is already the end and we hit the short squeeze, we break the pink box, we're definitely, in my humble opinion, going to visit 130, 140. That's the plan. What if we just kind of fizzle up here and that's a little three-wave correction and we still make lower low and we ultimately come down and come toward this deeper zone? We're still going to reverse and go up to 130, 140. All roads literally lead to 130, 140. So that's why I said I'm 1,000% confident on a 100% scale. This destination, it will happen. It's just a matter of, is the bottom already in place and we start breaking out now, or do we still grind lower to then do it? Well, this is where this big guy right there comes into play. We get above it, it's over. Stick a fork in it. We rally to it. That's not enough to say, well, it's, and now that it's in it, that means it's clearly over. Maybe, could be. But what if we get rejected and we go lower low? Then all I can say is we get down anywhere near that 85, 82 zone, I am salivating to go long, because that's going to be a hell of a trip from, say, the low 80s all the way up to 130, 140. That is a huge move for the dollar. Is this the beginning now, or do we got to go lower to get there? But again, that's why I keep reiterating this. We're coming up here, no ifs, no buts, no ands, in my humble opinion. So, drilling down to the hard right edge and where price action is screaming at the moment, and this is off of that prior high to this correction low, we took the 618 out on this big candle right there. That said, we had a 75% chance we were going to visit 101.08. And we have about a 70% chance we go into 101.46. Guess where we are? Right there. So there's a lot of important information here that now that we're here, well, Gary, why wouldn't we just keep going and hit 102 and go up to 105? Maybe that is what's going to happen. I do think if we close above 102 up here, that short squeeze will kick in, and we're going to start running toward that 104, 107 level, which again is from the prior last year short the dollar all the way down. That is my 618 retracement. So what happens if we get up here? we could simply be in that longer term 4-year downtrend we moved, and then this is just another correction of a 618 type of move, and we still go lower low, and maybe we push through that 87, 85 zone we've been talking about. That's still viable until it's not. So it's not enough to hit the short squeeze, pop up here into that 104 to 107 level. That's not enough to say it's over. We stick a fork in this. We got to get above that. We clear that hurdle and get above this pink box, then you'll hear me say, and you'll see on my chart, that's going to be my wave 2 right there. That's over, and we're onward and upwards toward that 130, 140 target. Fair enough? So cautious momentum right now, because again, we're reaching the extensions we talked about. Right now, we're right at it. And I just showed you on the software, when you come over here, the weekly is an overbought territory. This does not mean it's still kind of changing angle a little bit, but we're still up and up. And just because it's overbought territory is approaching this red line, that means overbought. That means that it has to reverse today, right now, within the next 5 seconds, or it'll self-destruct. No, it could possibly push up. And what if we did hit the short squeeze and push toward that 105, 104-ish to 107? Then this thing could push a little bit more. Even though it looked like it was going to top out, it kind of just pushed a little bit more before we got the bigger reversal. But just be careful. We are going to turn over at some point. The question is this weekly going to turn over in the coming weeks to cycle down? And we get this run toward maybe 102, we push lower, or do we hit the short squeeze and maybe turn over to slingshot higher and continue this? It's possible, yes. But when you get a weekly overbought and a daily overbought, that is time to be cautious that we need to take profits. And we're expecting some sort of pullback. What is so unique about this software, Mr. Tucson, as everyone knows, when you get a cycle, when I get a weekly to PAI hook and cross, steep slope angle separation, whether it's one of these deeply oversold, we got that big bounce there, when the PAI hooks and the trend momentum crosses green above the red, on a weekly chart, it gives me an extremely high confidence rate that the daily is going to cycle. So you get a weekly hook and across, the daily cycles. You get a monthly hook and across, the weekly cycles. You get a daily hook and across, the 4-hour cycles. You get a 4-hour hook and across, the 1-hour cycles. You get the pattern all the way through the time frames. Why is it important? If I'm an options trader, we know a daily takes about 2 to 5 weeks to cycle. So if I know I got a weekly hook and a cross and my daily is going to cycle, I know over the next 2 to 5 weeks, we're going to have upside pressure as the daily cycles. So I can use that to my advantage. Well, what happens when a monthly hooks and crosses? Well, it takes about 2 to 5 months for a weekly to cycle. So now I could push my options out several months, knowing that my monthly has a hook and a cross and my weekly is likely to cycle, like we got this last cycle here on that weekly. The monthly turned over and we got that weekly to cycle. Who could have guessed? Who could have thought? Who could have anticipated when we got the monthly to hook and cross, a steep slope angle separation, that this move would result in a weekly grinding and cycling up? Well, it's possible that could be the end. This monthly could keep going months and months and months. How long does a monthly take to cycle? About 2 to 5 years. Kind of ironic, isn't it? 2 to 5 weeks, 2 to 5 months, 2 to 5 years. Kind of is the cycle scenario. So, is this monthly ready to go breaking out? It could. Well, the way we're going to get to that 130, 140 target way up there is this monthly is going to cycle. And then I wouldn't even be surprised to see that as it's getting up there, we probably turn over and slingshot a few times to even get up there. I don't know if we have just in this monthly cycle, we're just going to go straight to 130, 140 on a cycle like that. We may need it top over and slingshot higher to get to that. Kind of like we did over here as we were grinding higher and higher. We had to start to do a little turnover slingshot as we kept grinding even higher. All right. So you got plenty of room on the monthly scale for this thing to continue that breakout and head toward 130, 140. Yes. But with a weekly overbought and a daily overbought, it's time to take profits on this run. What if this is that A, B, C correction, and then we ultimately get a weekly to turn down, cycle down, the daily obviously would cycle, slingshot lower and lower, pulling the weekly down, and then that monthly that's turning up, it would slingshot lower. All right, we kind of go up, slingshot lower, go up, slingshot lower. That's how we got down here in the first place. We kind of move this process. And is it possible that this could weekly cycle down, this slingshot's lower, and this turning up turns back down, and we push toward that 85, 82 zone we just looked at, maybe get a new swing point low below COVID, and we get to those extensions? What would that look like if we did? I can paint the Picasso of this software. If we're going to go down to that 85, 82 zone, which from that low to that high, we broke the 618, kind of still says we're likely to go there, then this thing should slingshot lower and maybe do it a few more times to get us down there. Got it? So it's possible that this monthly could turn into slingshot palooza, and we ultimately get to these targets, then we go reversing. But if this is the end, and that's it, folks, we break above that 105 to 107-ish zone, we basically break above that swing point, that's over, and what happens? Onward and upwards to 130, 140, and this baby will keep going, and we'll even probably slingshot higher and higher as we move toward 130, 140. Fair enough? But please take heed in this dollar rally, because the weekly's overbought and the daily's overbought. That's time that you get your position of authority and look out. Now, saying that in the same breath, that if we do break and close above 102, highly expect this to continue, and we push toward that 104 and change to 107 level, which again, from the prior high to low, where the short squeeze started, that would put us right into that 618, 786 zone. So the cautionary tale is, even if we get the 102 short squeeze and we go popping up here, we still could get rejected to go lower low. Fair enough? We clear this hurdle, it's over. No ifs, no buts, no ands. Once we do that, that baby is done, and we're onward and offward to the stair step for years. I think it'll, probably take a year or so to get to that 130, 140 target. But again, with a daily and a weekly overbought, what does this last price action look like? A, B, C. And what happens after that? If it's in the same trend continuation down, we go lower low. And if it is the bigger picture from the COVID low, that lower low leads us to 85, 82 zone. And that's what we originally talked about 4+ years ago when we said, hey, the dollar is going to reach 114, well, 115, 120, and then it's going to have a big multi-year correction. Remember when we talked about this almost 4 years ago, we said, hey, we're due for a multi-year, not a few days, few months, few anything, multi-years correction. And then we're going to go breaking out again. That was always the plan, but this was the correction. Do we go lower, or do we fulfill this destiny from that low to that high? We broke the 618. We shall see, but as the daily and the weekly are overbought, expect in the coming days, we're going to get a pullback, And if we can't close above 102 and get that pop, we might get that pullback much sooner. What does that mean for the euro dollar and the pound dollar? As I warned you, as the dollar would go breaking out toward those targets, the euro was going to go breaking down. Inverse relationship. When the dollar rallies up, the euro dollar goes down, right? Inverse relationship. Why is that? The dollar index is made up of a basket of currencies. Most predominant currency in that basket is the euro dollar. So that's why it's the exact opposite. I mean, perfection. You go to the software. Remember what that dollar index looked like on the daily? The euro looks exactly like this, but inverse, where we've been going lower and slingshotting down. Here's the euro. Looks like identical, doesn't it? But in the inverse relationship. So what are we saying about the euro? Be careful, because my daily's oversold and my weekly's oversold, where the dollar was overbought. We're oversold on these. So that's telling me, are we ready for another bounce coming on the euro? Yeah. The dollar's going to give us a pullback and the euro is going to give us a bounce. From this prior low up to the high, we're not even close to that 618 retracement zone. So I'll go back to the charting platform to show you what that looks like. From that prior low, 4 years ago, not even 4 years ago here, but this prior low up to the high, you can see the 618 is down here about 109. Still several hundred points away. So what if the dollar hits the short squeeze and it goes popping to that 104, 107? The euro is going to go down here, seeking out this 109 area. Got it? And is it possible we could have that low up to that high, get a 618, bounce and still go higher high? Sure. How do we know that? Go out to like a 3-day. And you can see when we bottomed over here, we did that exact thing. Eric, James, Ian, Mr. Tucson, Emil. We got a rally up, got a 618 retracement. Perfect. And then we popped and went higher high. So could we do it off of this low to that high, get a 618 and do it again? Sure. That's why this support zone, like that big pink box on the dollar index, this is the equivalent of the support zone on the euro. And what is that? From that low 4 years ago, when I said might consider going long the euro dollar, it's going to make thousands of pips over the coming years before we ultimately reverse and go lower low. So what happens when the dollar rips to 130, 140 in the coming years? Euro is going to go down here to 0.8, 0.7. This is highest probability we're going down here. The question is, was that last rally here the end? Is that a big A, B, C, and it's over, and we continue with the euro downtrend? Maybe. All this ever was multi-year correction was to be a lower high to a lower low. It was never, let's go long the euro because we're going to go breaking all-time highs and we're going to go ripping above this 160 up here. No, it was simply a correction to a lower low. Amen? So what's this likely we're going here? I'm about 1,000% confident on a 100% scale. How do I know this rally to the upside correction was over and we're definitely coming down here? We get below this green support box, it's over, and we're going down here. Just like the dollar, we get above the pink box, we're going at 130, 140. We get below this green box, we're going to 0.8, 0.7. Maybe even a little bit lower, we shall see. So why am I still holding on to potentially more upside? Well, the dollar broke the 618 saying we're likely going to go lower low. Well, check out what this euro dollar did. It gave us even more reason to believe. From the recent high to the low, we took the 618 out, which says we had a 75% chance we go into 127.45. We have a 70+% chance we go into 130, basically 131. And then what did it do later? We actually broke the 786. So what's the rule? You get your swing points, you close above, not just a poke above, but a close above on a daily, weekly, 3-day, monthly, etc. And that happens, you have a 75% chance you go visiting a 1448 extension and the 1272. People always say, well, Gary, that's not a Fibonacci number. There is no 1.1448 Fibonacci number. That is correct. What is this number? It is 90% of the 1272. And I found from a lot of back testing and history and reviewing charts, a lot of times it sometimes only gets to the 1448 and peters out. And a lot of times it'll reach the 1272, sure. And other times it'll just keep ripping to the 1618. So Fibonacci levels, yes, but that's why this was so significant. Any questions? So what's going to happen? Well, we still have a high probability we're going up here because we broke that 618. But that wasn't enough for the euro dollar. Euro dollar said, wait a minute. Notice the candle bodies over here. We're above the 786 level. Wow, that's pretty impressive. Well, actually that high and above. Well, that reconfirmed we're still likely going up here. When is this off the table? We get below the green support zone. This would no longer be viable if we get below this. We get below this, where we ultimately headed in a multi-year move down toward 0.8, 0.7, maybe even lower. Any questions? So up and until, just like over here when this reversal came up, looked like we were never going to go anywhere. We just kind of went sideways. And I kind of warned you when this kind of looked like we were ready to go ripping higher toward our target. And we said, well, we could get a 618 retracement out of this. And if we do, when I said we break 104, remember that conversation years ago? We break this little swing point of 104. Don't go heavily short on the euro because we're just going to make a slight lower low before we go reversing to go higher. That's exactly what happened. You got a beautiful 618 retracement and we're moving. Well, from that low to that high in this retracement, we never did finish that up move yet. So what does that mean? Use a 3.2. You got that low, you got that high, you have this higher low, and notice we never quite reached that extension up there. Actually, we went right. Yeah, we did. We did hit 120 right at it. So we got to the 1448 extension, but we never reached the 1272, and we certainly didn't get up here toward the 1618 yet. So what does all this mean? Be careful. This down move is likely going to bounce. That up move on the dollar index is likely going to pull back. So my daily's oversold, my weekly's oversold. I'm expecting a bounce coming soon. Today, tomorrow, next week. Are we going to finish this cycle? We still have a 75% chance we're likely going up here until we break below this. We break below that, then you know where we're going. Got it? So please be careful. And again, on the daily chart, from this recent low up to the high, we're nowhere near that 618 yet. That's right around this 109 area, several hundred pips lower. So is it possible we rinse and repeat? We got the first move up, we got a 618 retracement, we went breaking out. Now we got this new low to the high, we get a 618 retracement, we break out, go more. I'm not trying to tell you we're definitely coming down here, but you betcha if the dollar hits that 102 short squeeze and goes popping to that 104 to 107 level, then this euro is definitely coming down to this right there, 109 / maybe this 106 level. So this is the 104, 107 on the dollar index. If I pop up there, then this baby is definitely coming down and testing that. Amen? All righty. So if you're short the euro, I would definitely be in a position of authority expecting we're going to get a bounce on this. And this bounce could be a higher low, obviously, into a higher high because of that prior price action We broke the 618. We broke the 786 over here, which says we still have a 75% chance we're going to 127.45. Pound dollar's in the same boat. It did the same as the euro. We had that prior low. We had that prior high over here during COVID and moving in down this low. So we had the high, we got the low. We broke the 618 a long time ago. You can see we broke that 618 level way over here in 23. July of 23 said we have a 75% chance we're going toward 147. 70% chance we're going to 152. Later, after we corrected for a while, we actually broke above the 786. So we not only confirmed it way back in 2023, we finally reconfirmed it over here in 25 to say that this is still a viable target. When is this not viable anymore? We break below the support zone. What is that support zone? That is the prior low up to the high, my 618, 786 zone. See, I'm kind of right there. The green color overpowers it, but that's this zone. So, Mr. Tucson, what's the likelihood we're going up here? Still 75%. That's still a greater percent, even though I'm telling you, if the dollar hits the short squeeze, this thing's going to come lower, sure. But it doesn't mean it's coming, breaking this and going lower low. Where's the lower low? When the dollar hits 130, 140, where's the pound going to be? Below parity in this 0.9 to 0.8 zone. So I'm very confident this is where we're ultimately headed. The question is, do we get the bigger retracement first? Then we get the move lower. This is clearly the destination. I'm just not convinced we're not finished this upside yet because of that scenario. Broke the 618, likely going up here. Broke the 786 and reconfirm. We're likely going up here, and we're likely going up there until we're not. And when is we're not, we break this, then we're likely going lower low, and there's your target. Amen? So please be careful on that. The pound's kind of in the same boat. Go over here to the software, and we can see what that pound dollar looks like. Well, my daily's oversold, and my weekly's in oversold territory. Kind of in the same boat. So yeah, it could still go lower. The dollar hits 102 and pushes toward 104, 105. This thing is definitely coming lower. And this will keep pushing. But just be careful. When both the weekly and the daily are overbought, in this case, and or oversold, like the here in the dollar, euro dollar, and pound dollar, and the dollar index being overbought, it's time for some sort of correction. Amen? So please be careful. Yes, this could go lower, but it also could get a reversal coming in the next few days or week or so, and that is still the plan. Is this likely going to go breaking out higher high? Well, that still is a viable target from that prior high to low, still viable. This is where we're headed before we're done. We get below this, it's over, and we're going much lower low, thousands of points. But you remember that same conversation almost 4 years ago when this was down about 1.03, 1.03. I said, man, what an overreaction to this pound selling off. Might be a good idea to think about going long because this thing's going to make thousands of pips over the next several years in that correction. And then we could go short again to go thousands even more down to new lows, but we needed this correction. And this is still on the chart until it's not. When is this X'd out? And you go, you know, stick a fork in this baby. This is no longer going to be an option. We get below this green box. The option is then 100%. We're going down to that 0.9, 0.8 zone. As the dollar gets to 130, 140, this pound is going to get to that 0.9, 0.8 zone. All right. Euro yen, pound yen. Been warning you about this. Sell, 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 sell. Get out of there. This is not going to go breaking out. this price action is conducive to a lower low. Huh. Is it working? Yeah. Yeah, it's working. Remember a few weeks back when we talked about the same thing? I said, be careful. This thing is due. We made 500 pips in one day. Not too shabby. I liked it. So what is this likely telling us with this price action? Overlapping, chopping. We're going lower low. My target is 170, minimum 180. Probably this 179, probably 178 zone. 179, 178. That low, that high. We never officially closed below that 618 yet, but it's coming. So if you're short, be careful around this magic fibbo, this big line right there, because I would not be surprised to see this thing dip toward that, get a little bounce off of that, lower high, lower low. But the plan is based on this move, this correction, we need to go lower low. So there's your target zone. There's your target bubble. Are we going there? Highest percent chance, in my humble opinion, that's exactly where we're headed. And we still have a few hundred more pips to go. As we started out, made 500 over here, got a correction into the resistance zone, failed. So what happens when you do a retracement and fail? You go lower low and you go looking for your extensions, and there you are. Amen? So, as I've been saying for weeks, any rally should be sold. Any rally should be sold. So I'm going to continue to say it. Any rally on the euro yen or pound yen should be sold because we got to go lower low. Got to clean this mess up. Pound yen's in the same boat, kind of grunting and grinding in the same zone. We had this initial move down, big reversal, and this chopping, overlapping is not conducive to go breaking out. It's more conducive to breaking down. And my target zone on this is right around that 208 down to about 206. This little bubble here, that's where we're headed. It could take days, it could take weeks. I just know this is a high probability target. And I've been saying ever since this overlapping corrective action, we really need a lower low to fix this. And once we get the lower low, is that what we need? Or is this a much bigger correction that's unfolding off of the carry trade unwind where we had that big move down here? This is chopping and overlapping. And this chopping and overlapping was not conducive to trend continuation. And some people would say, well, look at all this. This is trend continuation. But it's overlapping. Every bit of this is overlapping. So from a bigger perspective, this could be what looks like a big A wave. All of this, even though it made a higher high, is a B wave. And we need a C wave to come back below this level to clean that picture up. That is, from where we are, 1,000+ pips down here, thousands of pips to get down to that low. So first things first, this target. What happens if we don't hold that? Then we start moving lower, maybe from that low to that high. We get a 618 retracement right around here. What if that 618 retracement doesn't hold? Then we start looking extension, 180, 176 area, which puts us right where this big ABC is kind of forming. Amen? Any questions? So am I guaranteeing we're going way down here? No, I'm not going to guarantee it, but we got to get to here first. We don't hold that, and we start looking for this 195 target zone. We don't hold that. We start closing below that 195, 192 area. You can see right there, 190. We get below that, then what's the idea? You close below the 618, you got a 75% chance you go into 1448. And then about a 70% chance we go to the 1272, which is right around 176. And that would be the big A, B, C, right in that target zone. So I've been talking about this for months. Well, if that's not enough for you, let's go back to COVID low. Everybody loves the COVID low. I do. This was substantial during that COVID low. I made a bold statement. Everybody else, you hear, Have you seen my prediction? I predict this. I predict that. I predict. Even my gardener predicts when my roses are going to bloom and my azaleas and all these other things. He predicts this. I'm like, okay, I got you. Well, I leave that to the prophets. I anticipate with the best of them. What do we call this software? Market Price Anticipator software. That's the beauty of it. So back then, I made a bold statement, not a prediction, but an anticipation, an expected move that we're going to get over the next several years. We're going to move 8 to 10,000 pips higher. In the archives, you can listen to it. In the archives back then around March of 2020. Hey guys, we got a highest probability based on this corrective action and all that we're seeing, we're overdue for a run up to go back to this high and make a new high. Multiple years later, like we had said, we got it. Now what? Just like I said then, I'm saying now. Shorter term, we need this price action is much more logically going lower low than it is breaking out. So what do I do in a position like this? I've been going short, get to position of authority, and let it continue to run. Well, we hadn't reached the target yet. So what happens if you get in and you get pipped out? I get back in and get to a position of authority. So any rally should be sold and look for this lower low to come into play. We don't stop because we're probably, when we get down here, I wouldn't be surprised to see a little bit of a bounce. But if we continue this high, low, lower, high, lower, low, lower, high, lower, low, and we don't hold this zone, because I do think we'll bounce out of it initially, then we get a lower low. So what do you do then? You got a high, you're going to have a low in here. You look where your 618 retracement zone is, just like we've been doing, and we rally toward that. We fail, we go lower low. Where would that start to put us? Well, the next target would be 204. Then we start looking to go below that 200 level, which would be where my 618 is. Of this low up to that prior high, which I could move it over there, is right there. So my 618 level is right there around that 96 zone. So, yep. So, Mr. Tucson, what are we telling you? No buy, sell, the whole recommendations. I can't tell you what to do. But the probability this pound yen and euro yen starts going lower low off of this latest move is extremely high probability. Once we get there, probably get a little bounce of that. But if we don't hold it and we start breaking below that, then what should we look for? Likely going to make a 618 type of retracement. Well, ladies and gentlemen, that's almost 1,000 pips from 207, for example, down to 197. That's 1,000 pips. Huh. That's nothing to sneeze at, right? And if we don't hold that 618 retracement, then we're even going lower low, which sets up this carry trade unwind over here back in 24. That looks like even the bigger move down. That's my A. All right, we just showed you. And all this chopping and overlapping is still corrective. That's the B. So we're likely, we don't hold that. We go to 618. We don't hold that. We're going lower low. And that sets up this bigger A, B, C. Amen? And look who's down there. 1448, 1272. When is this extremely high probability target? Not until we get down and close below this 196 area. Once we do that, then this becomes extremely high probability. But it fits the script. Amen? All righty. I think it's enough of that. Let's move on to the markets. What did I warn you about last week? Be careful. That looking at this is SPX, and we'll do futures in a moment, but SPX, Eric, James, Ian, Mr. Tucson, Emil, we had a lower high Uh-oh. Rut-row. What's the likelihood we're going breaking out right now? Not very good. What's the likelihood we're going lower low? Much higher probability. And I warned you about that after that insane run, which was expected way back in April when I had that correction, I wasn't expecting it to go blasting off to the stratosphere. I expected to go retest the highs as we went into April, May, June kind of scenario. Well, we did this rip into April and just took it all back and went all-time highs and then continued this punch junk euphoria through May. And as we had that big run up here, I kept warning, look out, we need a correction. We got the correction, then all of a sudden it was we have the MOU that it looks like this trade thing's going to work out with Iran, the deal. And then we got to push lower. And then we got to pop into this week. And then what? Lower high, move down, lower high, move down. You see, well, Gary, I can't see anything with all those lines. Warned you about the push lower. We got it. Oh, it looks like we got a deal. So this thing went popping up. And I warned you about this. I said, be careful here. We're kind of pushing the outer limits of that high, low 618, 786 zone. But this is not a given, being that we're at that lower high. We got another push lower, kind of filled that gap up, filled the gap back down. And then we got a pop, and we're still at that lower high. And lo and behold, this is a down move. That lower high, next move down, lower high. Got the lower high trend lines. So this is screaming lower low. So any rally on the NASDAQ right now or on SPX or ES, depending on how you're trading it, SPY, many ways to trade this thing, I would be looking to sell any rallies in the short term because this price action is screaming we got to go lower low. And that's my 72 to 7,000 range. You can see where the magic Fibbo's sitting right in that ballpark. So I would expect us to come down and visit this area. Any questions? So any rally should be sold and look for this thing to push lower in the coming days. Does it have to get there tomorrow or the next week or the next few days? No, but that's kind of the plan where it's headed. On ES, I was very warning about that with this contract rollover right there. This thing looked like, if you zoom in on it, because of the contract rollover, that this looked like it actually made a higher high. On this chart, it did, due to the contract rollover. But I went on to show you, I said, now be careful with this, because this is likely not real, because SPX, the index, made a lower high. But if you look at the individual contracts, and the individual contract would be right there, ESM 2026. I'll use my shift key, get out of there. ESM 2026. There it is. There's the U. Where's my M? ESM 2020. I guess they took it off the chart. They're not going to show it to me anymore since it's already expired. Looks like they took it off. Well, anyway, we can look at the current contract right now, September, which is the U contract, and it's at a lower high, right? So this was a warning sign. April, we got the big run up. We got the correction. We went to the 618-786 zone, made a lower high. And this is telling us what? We're likely still got to go lower low. Any questions on that? Still likely got to go lower low before this thing is done. Do we go lower low and then we bounce, or do we get a much bigger correction? And then maybe the fall we've been talking about for several months now, that after this run up, we were likely going to get a much bigger correction. Well, this is pretty shallow so far from that prior low up to that high. This is relatively a shallow retracement so far. Any questions? So we're likely going to go visiting the magic fibbo. We don't hold that, then we got my 618. What happens if we start closing below, say, 6,800 and this 6675? That's my 618786 zone. Then we go lower low down to the low 6,000. And guess who's sitting down there on the low 6,000s? My weekly, and you're not going to show it on this one, but I'll show you on the real one. My weekly magic fibbo is sitting there in that low 6,000s. Got it? Any question? So is this really going to play out, Mr. Tucson? We kind of go lower low, and then we don't hold the 618. Then we start going to extensions, and lo and behold, we get that fall in the fall before we go blasting off in the next year. Maybe. Kind of threw this out there months ago. Let's see if it plays out. But be careful in the interim. Any rally should be sold until when? What if this thing turns bullish and we get the breakout? What would be my targets to the upside? Well, you come back to the same chart and you say, okay, if this thing is going to go bullish, I'd look for two things. A, this low, Harold, up to that high, which you can see where my 618 is right there. We're testing it right now. We didn't close below it. But if we continue to fizzle where I think we're headed and we close below that 618 level, then it says 75% chance we're going to visit those lows, which again, I actually had it on the chart already. You can see the double line, but I just wanted to see what that looks like. So if we don't hold this 618 zone, which we're testing, then we go lower low. And where's lower low? Right here where my bubble is. So I still think this is a viable target in the coming days. Could we get there in a day or two? Could we get there by this, end of this week? Sure. And this thing could sell off pretty heavy. It was selling off hard early. We're getting a little bit of reprieve. And people say, well, what about kind of reprieve we're getting? Well, that's kind of standard when you get a big sell-off like that overnight in the futures market. You come over here to S&P 500 and you say, okay, why is this thing pushing lower? This is another reason, the bigger picture. What do we know when a slingshot goes up, engages, and then disengages? Well, we had this down move. We got the PAI hook, trend momentum cross. We had a cycle down. My 4-hour went to oversold. Remember when a daily hooks and crosses, steep slope angle separation, what happened? A 4-hour cycles down. Now what? That's why we're seeing a little bit of a bounce intraday like this. After that sell-off, the 4 hours turning a little bit. But I suspect this is going to go slingshotting lower in the coming days as my daily gave us this engage, disengage. So when you see something like this where we slingshot higher and then disengage, high probability we're going to go back to this low and make a new low. Well, guess who's sitting at that new low? Those extensions. And this daily would just continue down over the next days, pushing lower. Amen? So be careful. Any rally in the short term should be sold and look for this thing to go lower low. That's the plan for now. What if I'm wrong? And what if price decides, well, that's not in the cards? You can go to a lower time frame. Go to the lower time frames. This little bounce off of this latest sell-off, what will we have to do to kind of change and flip the script that maybe we're going to visit 76, 78, 77 zone? That would be my upside targets. But what is it going to take for me to start to believe it? 2.2, recent swing point high to the swing point low. We need to get above the 75-60 area. Ideally, I'd like to see it break above that. Then yes, we're definitely going up here. But just off of this recent high to low, we would need to get above 75-60 area. Right? So 100 points. If we rally 100 points, we get above the magic Fibbo right there, and we close above that 75.60 area, then that 76.20, 76.40 becomes high probability, maybe even as high as 77. But based on the prior price action, we really need to go lower low to clean that up. So this is why I'm saying if I'm wrong, then we got to get above this resistance zone, which would put us above that 75.60 area. We do that, then by all means, we're going to start targeting 76 and potentially 77. In the interim, we should go lower low. So we'll be targeting 71.80 down to 71.30 area. And why is that? You can compress all this. This is the, and here, like I said, it looks like it was a higher high, but you go to the actual contract and that's not the case. So we have the lower highs. And even after the sell-off and rally, we got another lower high. And a sell-off and a rally, we're still at a lower high. What is that screaming? Down goes Frazier. Remember Howard Cosell during the big fight? Down goes Frazier. Down goes Frazier. So please be careful. Any rally should fizzle, and we really need to go lower low to kind of clean that up. If I'm wrong, you got to get above this, and I'll switch gears on that. I'll fix that to that, kind of correct him, and change that to green for, well, it's still, I know I'll leave it resistance. That's correct. So any rally we get above this, then yes, we go higher high. We don't, we're going lower low. And the percentage is much likely we're going lower low. What about NASDAQ? It did the same thing. NQ, which is the indice right there, index, it made a lower high. But if you look at the NQ, it looks like we made a higher high, right? Well, we made a higher high. That means gung ho, we're going 31, 31.6, onward and upward. Do I think we're going to get up here? You betcha. But this is looking like we got to go lower low. So any rally should be sold, as this is more likely got to go lower low. And I love how the media and everybody's got to have a reason for it. Well, it's because of the Fed hawkish statement about raising rates. That's the ticket. That's why we're getting the sell-off. Well, I agree with that statement. Look at our DGS2, two-year maturity rate, which is the blue line, and then the Fed fund rate, which is this gold or orangey yellow line, however you see that at home. But that is telling us this was the Fed rate currently. And when we went into the prior Fed meeting, and I was showing you where this DGS2 was located, the two-year maturity rate, what did I say? Based on that, I cannot see the new Fed chairman, Kevin Warsh, cutting rates right now because the Fed rate is well below the current market rate. And people are saying, well, what is this anyway? This is what the Fed does. Let me go out to a weekly. This is what the Fed does. When the maturity rate races off, the Fed has to raise rates. When the maturity rate goes tanking, the Fed has to cut rates. And this goes back as far as most of you probably been trading. Certainly, I traded through these prior dot-com bubble burst into the 2007 financial crisis, even the COVID scenario where they shut everything down. That was on the charts. Likely we needed a big push. Even though COVID didn't come in until later, the charts kind of said the same thing. Well, when this baby starts racing off again, what does the Fed have to do? They have to raise rates. So there's no wonder he was a little bit more hawkish about, well, cutting rates. No, we might have to raise rates. Well, what's doing that? That could be temporary, could be transitory inflation, right? Remember Janet Yellen? It's transitory. Yeah, it's transitory, all right. Transitory inflation. Well, we know this was forced by energy prices. And even though oil's been coming down as of late, this maturity rate's not. It's up at 419. Now, this is a end of day kind of thing, so this isn't live tick data on this chart. You see it, but this is pushing the limit. If this continues and starts to get above this little swing point here, where we're a good full point above where the Fed rate is sitting, that's probably going to spark the next meeting. I think is September. No, it's July 29th. The next meeting, July 29th, if this thing keeps rallying and we get above that little swing point here, pushing us a good full point or more above the current Fed rate, then I see him raising rates the next cycle. And what I said over that before that meeting, I said, I don't see him cutting rates because he doesn't have room to cut rates, right? How can he cut rates when we were up here? And if he cut rates, then that's going to push us way down here, and the Fed rate would be down here, and the maturity rate would be way up here. So that's why I said he has room to raise rates last meeting, because, you know, you raise it a quarter point, you're still nowhere near where this actual 2-year maturity rate is. So, Mr. Tucson, that warrants Mr. Warsh being a little bit more hawkish about raising rates, because this is kind of running off. Again, I'm not saying it's a definite done deal. He's definitely going to raise rates in July. But if this thing keeps grinding higher and higher over the next month, and we start breaking out above this zone up here, where we're a point, so we're at 363, we start getting above that 4.3, where we're at 3.6, we get to 4.6 over here, 4.3, 4.6, we start getting a full point, then that's really going to put pressure on him raising rates. Amen? I digress with this, but remember, people think the Fed just decides what they're going to do. We're going to raise rates, we're going to cut rates, we're going to leave them alone. Follow this chart, and it'll give you great insight. Or just follow us, and we'll tell you what my opinion is, and we were spot on. So is this going to continue to go higher? What can happen? Well, it could be gas prices. Be careful of this. This is the heavily shorted. It went from the dollar, sell any, it was like sell anything but the dollar, short the dollar, short the dollar. Well, the big bucks right now is shorting black gold. Everybody and their brother is shorting black gold right now. So the technical picture looks like we still need to go lower low. We kind of said that, and we're approaching our target, right? Be careful. This looks like we, from that prior low to high, we broke the 618 way over here. We went to the extension. We're there, right? Could this thing go skyrocketing up? Yeah, no deal. No deal. We could go ripping up here. What in the world would happen if that goes up? And we see oil reverse and double up here into that 140, 150 range. Well, inflationary pressure is going to continue, and that DGS2 is probably going to continue much higher. And then Mr. Fed's going to have to raise rates probably more than just a quarter point, maybe multiple times to get control of it. So I'm cautious here, because what happens when everybody's leaning on one side of the boat? The markets want to rip the opposite direction. And what can happen with this? When you get one of those, oh, ceasefire is broke out and there's no deal, we go bombing, and then it rips way up here, and then next thing we know, we go right back down. So just because the market is shorting this very heavily, the market tends to want to rip, to put the biggest hurt on the most number of people, just so that when they give up and they start crying and it rips way up here, then it comes right back down to where everybody thought it was headed. So this is why we are in a position of authority on that short. This thing could go ripping at any moment. Ceasefire agreement, something goes wrong, any of that. Otherwise, we've reached these targets we talked about. So please be in a position of authority. I would not be loading the boat on shorting the black gold right now. That is come and gone. Yes, it can still go lower, but I would not be surprised to see some sort of pop. And if there's any rockets flying again, that pop could be substantial to where we're up here in that 140 area, 140, 150. Amen? All righty. So how's that go from the markets to gold? What all kind of fits? So be careful with this. The likelihood we're going lower low. NASDAQ, same thing. Likelihood was going lower low. So any short-term rally should be sold and look for us to start seeking out these lower low targets. If we don't then hold the prior low, 618, which we get to these targets, maybe we get a little bounce, the lower high, lower low. We don't hold the magic fibbo, which is getting closer and closer to that 618, then it opens the door, we're going lower low. Amen? So what? Lower low first. Can we bounce and go out and break new highs? Possibly. But if we don't hold the extensions, then we got the magic fibbo. We don't hold that. We got pretty much in the same area, my 618 level. We don't hold that scenario, then we're likely going lower low, which would be my fall in the fall. And who's sitting down there? Our magic fibbo. And this is what really excites me into next year. If we can get that combo meal, that low up to that high, we end up getting the fall in the fall and we come down toward this magic fibbo 618 retracement off of that Liberation Day low up to the current high, that 618 retracement zone right around that 21.9. Look who's sitting in the neighborhood, magic fibbo. So Mr. Tucson, what if we get the fall in the fall and then we go bouncing in the next year? This thing could go stratospheric. What does that mean? That means we could be pushing into the upper 30,000s and even 40,000. When you get a 618 retracement slash combo bounce, which happens to be 618 retracement combo with a magic fibbo bounce, a lot of times it pushes toward a 1618 extension. And that could put us in the 40 plus thousand. So from 20,000, we could double going in the next year. Yeah, that would be a hell of a move, right? Why not? That would kind of set the tone for the big blow off top and set up next year, Elizabeth, I'm coming to join you, honey, or another massive big correction. And I'm not trying to tell you we're going to 10,000, 7,500 scenario. I'm just saying it's going to be a big correction. If we get this sell off into the fall, we get the blow off stratospheric type of move into next year, then that sets up another big, big, big correction, if not the next financial crisis. Could it be the commercial real estate bubble, 5 trillion plus commercial real estate bubble that bursts? Could be one of a lot of things, but it's on the cards. Any questions? So what if we're wrong, Mr. Tucson? What if the marks decide, nope, you're wrong, that overlapping chopping price action lower high scenario is spelling lower low? What if we're wrong? Well, you still got the same tools. You use the 2.2. You go from the recent high down to this recent low. We would have to get above this 30,007. Kind of this same chop zone. We get above that, then it sets the tone. We're going to 31, 31.3 area, if not 31.6. That's the potential upside target. But for right now, this target there is much lower than this target down here. There's a much higher probability. So that's why I've been saying, be careful, sell the rallies, because we still need to go lower low to clean up this chop. And on this chart, it looks like a higher high, but it's theoretically not. If you go to the current contract, right? There's the June one right there. Notice it's a lower high. See that? Lower high, my friends. And we got to push lower. And this one, we had this correction we talked about to a lower high. We got to push lower. So watch this in this zone. This is where the contract ended. It looked like it was going to go breaking out, but lo and behold, it didn't. So what happened? Go back to the main one, go back to the current contract. That's this September one. And it too is at a lower high. And we kept that lower high intact. Had the first move down, correction to lower high. We kind of filled that gap up because, looks like we got a deal. It gapped up into that last week push. Then we got a fill of the gap. Then we did another lower high. So we have a lower trending high line there. See it? That spells lower low. So that's why I keep saying any rally should be sold in the short term. Why else do we think we're going lower low? Same thing we showed you on this engage, disengage on the S&P 500. Well, look at the NASDAQ. Ditto, my friends. Slingshot up, disengaged. So what is the likelihood when you get this slingshot up that fails? We go lower low. This continues to push over the coming days. We get that daily to cycle down, and we go lower low. Any questions? So the software is telling us we're going lower low. The technical picture is telling us we need to go lower low. And the probability tells us we're going lower low. So any rally should be sold, in my humble opinion, and we're going lower low. What are the targets? Well, you can use a 3-point tool from the recent high down to the low to the lower high. That would be the 28, 26, 27.6 area, 27.7. So on the smaller scale, this is my target zone. We go lower low, and we don't have to go way lower low, but the percentages are, we got to get below this low. So anywhere below that 28.5 would be enough. We do an equality type of move that put us around that 28.4, 28.392. But more than likely, we're going to go visiting the 1448, 1272. When does this become highest probability? Well, Mr. Tucson, you know the rule. You take the low, you go up to the high, and when we close below that 29.4 area, that sets the tone. We're going where? Right there. We close below that, 29.4-ish. Sets the tone. We're going down to 28.1. 27.8. It overlaps with the 3.2. Kind of look at confluence event 28, 28.1, 27.6, 27.8, right in the ballpark. So where are we going? We're going down goes Frazier. Down goes Frazier into this area. Do we have to get there today? No. Could it take days? Yes. But this price action, lower high scenario, still says more downside. What if we get down here and we don't hold, we do another lower high, lower low? What could be further extensions? Well, down here at 27, 26.8 with those extensions, the 1618 extension. But as we start to do that, what's next? You go back to the daily chart, you get that prior move into perspective. And if we don't hold the 618 level on the daily chart, it sets the tone. We're going lower low than this prior low over here in March. And that would be where my weekly magic Fibbo is sitting. So I'm going to go back to the original contract so I have enough data in here. And look where the weekly's sitting. Right around the 21, upper 21 area, 21.2 to 21.9. Is that going to be the 618/combo bounce off of the weekly magic Fibbo? to set up stratospheric move into the 40s? Maybe. So first things first, Mr. Toussaint, Alan, James, Ian, Emil, we got to go lower low. Or probably bounce out of that because it's a stair-stepping affair. Even if this is like a foregone conclusion, this is where we're headed. Fall in the fall. Talked about after that big run up, fall in the fall. So we get it. Man, talk about salivate country if we can get way down in the low 6,000s. Setting up going into Santa Claus rally into next year. And it ends up being a magic Fibbo 618 combo bounce. And that puts us into the stratospheric move up here to that on ES. That would put us in the upper 8s, maybe even as high as 10. Whoa, dude, is that even possible? Let's see if we can get down here first. I think we need that bigger correction to set the tone for something stratospheric. Short term, whether you're looking at ES or NASDAQ, again, sell any rallies because we need to go lower low. Once we get lower low, is it possible we could correct down here, bounce and go breaking out? Anything's possible in these crazy markets. But if we get down to this target, it doesn't hold. We go to the 618 zone, that doesn't hold, then we go lower low. And that would set up lower low again, is that weekly magic Fibbo. It's like perfect. Fall in the fall. So let's see if we get down here. That's still thousands of points away from 74 down to about 6,000, 1,400. That's a big move on ES. Is this what's coming? Maybe. But this is, in my humble opinion, is extremely high probability we need a lower low. And that would put us somewhere around this bubble / daily magic Fibbo. Which one is not showing the signs as everyone else? Is this Russell. Mr. Russell reached the 3,000 target we talked about. Is this correction going to continue? It's probably going to keep grinding toward 3,100. Been mentioning 3,100 for quite some time, that 3,000, 3,100 zone forever. We're already skimming the edges of it. So as long as this little swing point here around that 290, 2,900 zone holds, we're probably going to keep inching higher toward that 3,100. Be careful. Once we get up there, that could be the end and we get another bigger correction. So even though ES is very bearish looking to go lower low, and the NASDAQ is bearish looking to go lower low, the small caps have been very resilient, and it looks like we need to get up toward our sweet spot up here around 3,100. So as long as that swing point there holds, likelihood we're going to the next extension. What does that look like as far as numbers? Well, we got to see, are we ready to go breaking the new highs like we most recently did? Recent high to low. We reached extensions, even went up to 1618. So this correction was obvious. It needed it. Now, do we go breaking out even more to go continuation toward 3,100? You stretch this out, Mr. Toussaint. You bring this down to current price action and say, is this bounce going to hold? Or we're going to go higher high? What are we doing here? Or are we going to go and get a bigger correction? Notice where we're returning down from at the moment. 618, tested it. If we don't hold the magic Fibbo, then we're going lower low on this correction. Short term, right? High, low. We close above that 3,000 area. Then we go up here to basically 3050, 3080, en route to that 3,100. If we fail here and we don't hold the magic Fibbo, then we go lower low. And I know you're thinking, well, Gary, there's nothing but lines on here. So let me remove some of these and put a fresh one on this lower time frame for you so you can see what that's going to look like. And you use, in this case, a 3-point tool. that high, this low, this lower high, that would put us right around 29.30, 29.20, maybe 2900. A, B, C still go up. I still think we're getting the 3100, certainly, but be careful on this. Unlike ES and NASDAQ, this one does not have to go and do that much bigger correction because we've kind of already done the bigger correction and we've been breaking out. And this consolidation, we close above here, we go higher high toward 3100. We fail, we go down into this zone. So when would the key be on this? You got your low, you got your high. I need a 2.2, sorry, 2.2. That low, that high. So if this magic fibbo doesn't hold, you got your extensions here. And if that doesn't hold, then you got your 618 around that 28.8, 2008, right there, 2886 and slash 2815. So this little pink box, I'll turn into green for support. Should we get that bigger correction? Let's go green on that for support. So what if we get rejected and we don't hold the magic fibbo? We go to the extension. We don't hold that. We go to this extension here, which is my 618786. So is it possible we get this little correction here and then we bounce and still go on at 31? Yeah. As long as this pink green box holds, 3100's the target. So as long as 28.8/28.45 area, right? As long as this green box holds, we're going to 3100. So short term, maybe a little bearish to go lower low if we get rejected like we're seeing, but this is likely going to get a bounce and a push toward that 3100. Unlike the NASDAQ and ES, which are screaming much lower low. Got it? Got a long way to get down to this lower low. And ES has several hundred points as well. From this 74 down about 72, 7,000. We could drop another 400 points getting down here. 300 plus. That's the plan. Any questions? So in closing on ES, this screams lower low. Big time lower low. So are we going to get it? The plan. What if we get down here, we bounce another lower high, lower low? What do we start looking for? We may be getting into the fall in the fall. So go to the daily chart. First big support area, once we reach our extensions, is going to be this daily magic fibbo. Is it possible that this fall in the fall is a quick little dip and we go ripping sooner? Anything is possible. Believe me, anything in this marketplace is possible. But if my extension / daily magic fibbo does not hold, we got the 618 just below it, right? So we get below that 6,800, look out below, because we don't hold that. Then we have that low, that high. We don't hold the 618. What happens, Emil? We go 75% likely, we go into 1448. 70%, we go into the 1272. And who's sitting at 6,000, 6,100 area? Weekly magic fibbo, beautifully, right there. Any questions? So is the fall in the fall going to play out? Well, first things first, we get the lower low. We don't hold that daily magic fibbo, we get the 618 retracement off of that. That doesn't hold, then it's the fall in the fall, exactly where we thought we might go, and that would be right down here toward the weekly magic fibbo. All righty? Same thing with NASDAQ. Do we get the fall in the fall? Well, first things first, go to the daily chart, zoom this baby out so you can see what's going on. And the likelihood we're going to this lower low is very high. And what is my lower low? That 28, upper 27.9, 28/27 area. And if then the magic Fibbo doesn't hold on the daily chart, we have that same scenario, the 618 right a little bit lower. What happens if that doesn't hold? Then we go lower low to the extensions. And who's sitting down here at the extensions? Weekly magic Fibbo. Huh. And what I like to see this, well, we talked about here in April, when we had that April correction in the bounce. We're like, salivate, man, this thing, as we go into April, May, June, this thing's going to run. We'd at least go back to the high, maybe make a little bit higher high. Didn't expect that necessarily, but I just knew this is a perfect time for that buy. Well, what if we get down here in the fall? You talk about an ideal time for the next buy. Because if we end up with the 618/magic Fibbo combo bounce all at the same time off of that Liberation Day low, 618 retracement, weekly magic Fibbo combo meal, that potentially sets us up not only into the upper 30,000s, but potentially all the way toward even 40,000, 44. Wow. Like I said, that could be a double. Get down in the low 21 area, bounce to go to 42, pushing that 44. That's a double. There's no way that can happen. Oh, yeah? Oh, yeah? That would be on the charts. And just as much as I would salivate down here, say in the fall, September, October, maybe we're there and we're looking good for the big bounce going to Santa Claus rally into the year in first quarter, and we're looking for a massive run, salivate. What happens if we were to get way in the stratosphere? Sell, 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 sell. Because Kramer's going to be telling you to buy up here, and then the market's going to go tanking. Is it going to be the Elizabeth, I'm coming to join you, or just a big correction? So as much as I salivated with the little April run and then that run, and now we're looking for the next correction into the fall, that would be salivate country for another big run. If we can get way up to the stratospheric type of move, then we got a great short coming back down in the next year. All right, let's continue. Black gold, Texas T, we touched based on just briefly. All the money is pushing short, 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 short gold, short black gold, short, 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 short it. Be careful. When everybody's tipping the same direction, the markets tend to go ripping the opposite direction. So this thing could be fast, quick, and ugly if it's going to do it. We have a deal, no, we don't. It goes ripping up here. Then the next thing you know, it does come down here. So just all the shorts here get just squeezed and popped. And then the market thinks, ooh, maybe even some of them will start to go long and think, yeah, this is the end. And the next thing you know, it's way back down here where they expected it to go. If not, and there's no rockets and all status quo, this thing should just continue to grind its way down into the low 60s, maybe mid 50s is still the plan until it's not, but be in a position of authority. Because A, we're reaching the extensions, and typically after you reach the extension, you get some sort of bounce. Well, what's the software telling us? Software is telling us it's time that we expected this push lower. This was kind of the given. Monthly is starting to turn over on a monthly Q. We got a weekly that was starting to cycle and push lower. Still got a little something, something left. See it? So the monthly's hooking. This is pushing. So there is still some more downside on this weekly. But be careful for the little bounce to come because the daily is getting extremely oversold. And it's been slingshotting lower and lower and lower and lower. So we're due for a bounce. So this is why Dan and others, if you've been on that short or pushing down to that target, I told you last few weeks, this is the high probability target, unless rockets go flying. And even though rockets went a little flying here and then there, we still right here. We got what we needed. We reached the extensions from that low to that high. We got our extensions. We're there. And the daily's oversold. So that is screaming. Take some profits. Look for a bounce. Is this bounce with rockets could go higher high to 140, 150? You betcha. Or we could simply just get another rally to a lower high and continuation where we turn up and slingshot lower again to let the weekly continue to go. So that's what I would expect at this point, minus any major rockets and no deal, right? We got a deal and a rocket here or two, okay, but if it's no deal, then this thing's going to go ripping higher. If it is just a simple correction, then I would expect the daily to go up and slingshot lower again. Turn up, turn down, just kind of chop down in this area while we slingshot lower and lower. And we need this daily to continue this slingshot lower and lower and lower and lower, because that's how the weekly cycles. You get a daily to go from overbought to oversold plus slingshot lower and lower, and that's how the weekly finishes the cycle. Amen? So I still think we got some more downside to come, minus any rockets, and the weekly's not quite finished. Once we get the push lower, then I'm looking for the weekly to turn up and give us even a bigger bounce at that point. So this is a stair step. And all of that price action was screaming we needed this because of what? From May, I keep saying May, I do it every time. March 9th and 10th, we had the mouth of this wedge. And then for weeks, from March, April, May, into June, we just kind of stayed in this wedge. Lower highs, higher lows, and which way we're going to pop. We're either going to go up or we're going to go down. And based on this price action, this was a more logical target, but it was all about the deal or no deal. Deal, continuing to push lower. No deal, we go ripping higher still. But the key of these wedges like that, the size of the mouth, is a high probability it's ultimately going to play out. One way or the other. Right? All righty. So weekly says we still got some more downside. I'm looking for a bounce, so take your profits. Because I'm looking for a bounce, because my daily's oversold and it needs to depressurize. But as long as we stay below the daily magic Fibbo right here, downside pressure continues. And if we do play out the size of the mouth, that puts us over here into the mid 50s, maybe even a slight lower low toward this target down here. All right? Unless rockets fly. Other than that, probably still going to keep grinding lower. Gold. There's gold in them there heels. Warned you about the bounce. Likely still need a lower low. I don't think this is the end, even though we got a new lower low over here. That was the plan, right? Well, go back months ago, and I warned you when we were on the gold trains. Never going to stop. Gold trains going to the moon, Alice, to the moon. Warned you we needed a pullback. After that one in that rally, said, nope, this isn't going to make new highs. We got to go lower low. Then after looking at this price action, this chopping and overlapping and all this price action, this looks like it's not complete till we get yet another lower low. So not only that one, what did I say for months? As long as we stay below 5,000, we're going lower low. Remember that? That was in our archives, and I kind of talked about that for months now. Go below 5,000 way back in April. Go below 4,000 means, go below 5,000 means we're going below 4,100. We need a new swing point low, dude. Ladies and gentlemen, still expected we're going to a lower low. It's just got to happen. That's what the markets and the price action was telling us. So what did price action in the markets finally do? It did exactly that. We made a lower low, right? Then this bounce, that was kind of expected. I was looking for this 1, 2, 3, 4, 5. Finish that up in a bigger A, B, C correction. So, Mr. Tucson, the goal in which was stated was, hey, the moment we make a lower low than that, that's a nibble zone. Nibble means I don't max out every penny I have that I'm going to put a position in gold. It means I take a small nibble because I do think, Emil, it's still got to go lower low. I did go on to say this 39 to 3,700 is the sweet spot. That's kind of the sweet spot, my friends. It gets to 39, 37, buy more. What if that's not the bottom and it bounces another lower high, lower low? I would absolutely salivate city if we can get a weekly magic fibbo out of this thing. Like our fall in the fall for the markets getting that weekly magic fibbo, that would be ideal if we could do it on gold. Not saying we can get that far, but boy, if we can get to the around 3,500 zone, we're peaking up right into that zone now, and this is still sloping upwards. 39, 37 is the sweet spot. Add. We go lower low than that toward 36, start dipping our toe in the 35s. Man, that's getting nearer and nearer that weekly magic fibbo. Buy more. This is get on your knees and thank the good Lord above, because where's it headed? We're going to 7 to 10,000. In my humble opinion, no ifs, no buts, no ands, no exceptions. Gold is going to go ripping into 7 to 10,000 is the next goal, right? Any questions? So what is this telling me? I think we're still got to go lower low. So anything in that 39, 38, 37 zone, definitely take a position. And I can't tell you what to do. No buy, sell, the whole recommendation. Well, Harold, you remember this story in the last several weeks? I went through the process. I'll go back to a daily to show more of the ebb and flow. But I said, now that we got the lower low, what if I bought here and it rallies nicely, thinking, man, that was a good idea. I bought here because I bought under 4,000, right around that low 4,000, 4,000, whatever. When I bought below this 4,100, woo, that was a good idea. Good thing I did. This thing started to rally about $200-300. Wow, what a trade! And I said, don't panic if it still goes lower low. Just take it in stride and add more to your position. And then we do it again, add more to your position. If we can get anywhere near that magic fibbo on that weekly chart, whoo-hoo, that's where I back the truck up. And what are we going to do? We're going to hold it till it pops 7, headed toward 10. And you want to go back in history, same type of thing. When gold, many moons ago, hit this 1900 over here, I didn't make a prediction. I made a bold statement. And I said at this juncture, way back, that gold had to go to 1,000 before it then would go breaking toward 3,000 and higher. Wow, that came true. Well, here's my new big bold statement. Again, not a prediction. That's for the profits. We're going to go lower low, which puts us in that 39 to 3,700. Could that be the bottom? Maybe. If it rallies again, makes another lower low, I just keep adding and adding and adding. And if we get anywhere near this 34, 3,500 zone, that is get on your knees and thank the good Lord level, because that is a double minimum waiting to happen. What does that mean? We get 3,500, we're definitely going to 7. That's a given. Probably going to 10. 7 to 10 is the zone, but if we get to 35, that is a double. And that's the same kind of thing we gave you when it was 1,900 going to 1,000. That was like a triple from 1 to 3. Well, this next one is going to go from 38, 37, 35, whatever that low ends up being, to 7 to 10. That's the next big run. Any questions? So on a daily chart, any rally should be sold on gold in the short term, unless you're investing already for the bigger picture and say, well, no, I'm not selling rallies. What I did, I accumulated here. And when I go lower low, I'm going to accumulate some more. And if we get another lower high, lower low, and it pushes toward that weekly magic Fibbo, then I'm just going to go, thank you. What a great deal to buy at this low. And then I'm going to hold it till it rips to 7 to 10. Whether you go to Costco and buy a gold bar, you buy some ETFs, some leverage ETF, some miners, whatever you want to do. All right. Silver. What about silver? Still think we got to go lower low as well. We poked it. Got a little pokey, but we still haven't made a lower low yet. So be careful with silver. I don't think this is the bottom of silver. It's ready to go ripping out. I still think we got to go lower low. Any questions? Man, if silver can do the same type of weekly retracement and we dip below 50, anything below $50, man, that's a beautiful time to add, and add heavily, because silver, its target's way up here at 150 to $200, way up here. So what could that be? We get to 50 or lower? Whew. You're talking potentially not only 3x to 150, but 4x toward 200. All right. So Harold, I don't think that was the bottom. If you nibbled already, that's okay. Just expect it's going to go lower low. And once we go lower low, we still might get the kind of same scenario. Well, we get a little bounce. Ooh, I was smart. I bought it. Uh-oh, maybe I should have waited. And then we do it again. Yeah, I bought some more. Uh-oh, maybe I should have waited. So don't panic if that happens. It just means you nibble. We go lower low, you nibble some more. We get anywhere near that weekly magic Fibbo, which would be poking the toe, dipping the toe in 50 or lower, back it up. Because this will go ripping into that 150 to 200. Still probably take a few, a year plus. I'm not trying to say, well, if the markets do it and we go ripping to the stratosphere into next year, then silver has to be sitting up here at 150 to 200 by next year. Anything is possible, but probably take longer, a year or so or longer to get up there. But this is a very, very, very extremely high probability target. Just like my 130, 140 on the dollar index is a high probability target. Well, this 150 to 200 is extremely high probability, just like the 7 to 10,000 is on gold. And I'm not convinced that this is finished yet. This is still corrective, and we need a little bit something more, and we get it. Look out. Over the next year plus, we're ripping massively higher. All right. All righty. What about Bitcoin? Kinda. We've been talking about this for months and months and months and months and months. We got the lower low. We got our correction to that extension field. And I said, be careful. That may be it. If this thing does rally, the most I think we'll rally back to is at 70,000, maybe the magic Fibbo. But that's setting up the next push into the fall, which we expect is the buy zone for Bitcoin. 50 to 30,000. 50 to 30,000. Still think we're getting down here. So the rule is, and again, no buy, sell to hold, any moment Bitcoin hits 50,000 or lower, we should nibble. Maybe buy some Bitcoin in Schwab Crypto or in crypto.com or Coinbase or anywhere else. If you're global, then you can use Binance or any. I don't care where you buy it. Bitcoin at 50,000 is a steal of a deal. I expect it's going to come down to 50 to 30,000 and start reversing. That's my bottom and reversal zone. When did we last have that? In 2022. And I went on for weeks and weeks during our live classes. Ladies and gentlemen, Bitcoin below 20,000 is like committing a crime. It's such a steal of a deal. It's like you're committing a crime, right, Harold? You buy it at 20,000 and lower. Man, that's when Bankroyd Freeman and the whole crypto was a scam, and there were blood in the streets, and it's a racket. There's no such thing. It's just a scam. I'm like, good. Buy below 20,000 and you will be one happy camper. 4-year halving every 4 years happened in April 24. We rallied and broke all-time highs into that halving. That was part of the FOMO. Talked about that going in when the new ETFs were on the horizon. There was going to be FOMO, fear of missing out, and this thing started ripping. 12 to 18 months post-halving, we went shy of our target. I admit it. Hopefully you forgive me when I said 150 to 175 was the target. We only got to 126 and change, 126.2 or whatever. Well, below 20,000 to 120 plus, that's a 6x. Are you really that disappointed? I know who's disappointed, people that didn't buy down here. And they kept going. Well, it's still a scam. It's still a scam. And they weren't listening. And then 12 to 18 months post-halving, when does this baby top out? Exactly 18 months later. Huh. We're going in the crypto winter. That's my 50 to 30 zone. That's this zone over here. Do we have the luxury of being down in this zone for that long? For months, August, September, October, November, December, all the way into March. We had months of this thing chopping in that buy zone before it then went ripping. I don't know if we're going to have that luxury down here. We may just dip in here and reverse very quickly. All I know is it hits 50, I'm buying. It hits 40, I'm buying a lot more. It hits anything, dips its toe in the 30s, I'm backing the truck up. And I'm going to be buying some Bitcoin. I'm buying some ETFs, whether leveraged, non-leveraged, it's up to you. But all the above, why not? And the goal is to what? 200,000 and above. 200,000 and above. So buy at 50 and it goes to 200, that's a 4x. Goes to 30 and it goes to 200, that's over a 6x, almost a 7x. So I'm looking for big things to happen. When's the next halving? Between April and May of 2028. So we have over a year plus just to get to the halving. Then we got 12 to 18 months. So let me show you something I've always shown. Every 4 years, Bitcoin goes to halving. That's the blue line. Blue line is every Bitcoin halving. Back in 12, 16, 20, 24. The next one is 28. Do the math. 4 years from that, we'll have another halving in 32, 36, 40, etc., right? And during that period, even though it doesn't look like much on this chart, look flat line, if you zoom that way up, this thing went from dollars to 1,000 plus. I mean, massive run up, 12 to 18 months. Crypto winter low, starts drifting toward the next halving. 12 to 18 month run, tops out. Get a crypto winter low, starts drifting toward the next halving. 12 to 18 month run, crypto winter low, 12 to 18 month run, crypto winter low, et cetera, right? Post halving. So we're buying in fall, or when Bitcoin hits 50 and lower, we're buying and accumulating our positions. And then as we get into the halving in 2028, roughly May of this point of 2028, we're going to hold it till when? September, October of 2029. What else have we noticed? Where these babies top out, it topped out in 4-year cycles. So we topped out in 25, we're going to top out in 29. That's not armchair quarterback, that's when it's going to top out. In 2029, fall of 29, Harold's when we bail. and we look for the next big pullback, and then we look for the next halving in the next 12 to 18 months, but we buy for 3 years. It bottomed in 22. It will bottom in 26. And when it bottomed in 22, where did it bottom before that? 18. And where did it bottom before that? 14. And where did it bottom before that? Back way over here when this thing first started coming out. Got it? So we bottom in 4 years, we top in 4 years. When did we top out? We topped out in 21, 25, 29. Do the math. 29. We topped out in 25. We're going to top out in 29. We topped out in 25. We topped out before that in 21. We topped out in 17 over there, December, right over there, November, December. So that's the plan. Buy low, sell high. Buy low, sell high. Buy low, sell high. And this is not intraday. I know people like to trade this every day. I buy low and I sell high, and I buy low and I sell high, and I buy low, and I follow the rules and the ebb and flow of the markets. But I still think, now that you got the rhythm, every 4 years it tops, every 4 years it bottoms, and we're on that cycle to bottom in what? 26, to run for 3 years into topping out in fall of 2029. And my zone is 50 to 30. And anytime it hits 50, buy, 40, buy more, 30, look to the heavens and go, well, that's a deep blessing, because that baby from in the 30s goes to 200. Man, that's pushing a 7x. And who's to say it stops at 200? So in closing, any questions? This is likely going lower low. And Ethereum is the same way. We're going lower low. And Ethereum, based on its latest price action, looks like we're probably even going to go lower low than this 2022. Well, it's kind of way over there. I guess I'm going to go to a weekly chart. This 2022 low over here. So if Bitcoin hits 50, you buy, 40, you buy more, 30, you buy, load it up. If Ethereum hits 1,000, you buy. It hits 800, buy more. It goes lower low, even by 1 penny, load it up, because this is my buy zone over here. And look for this thing to go ripping into what? Fall of 29 in the stratosphere. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. Join us again tomorrow. That's it. That's all.